Welcome Forex traders to this video analysis brought to you by Admiral Markets, where I take a look at what happened to the dollar last week as it faced resistance for the very first time in front of this week's FOMC statement later this week. Before we actually take a look at the euro dollar, pound dollar, dollar yen, and AUD USD though, this disclaimer is valid. The video is intended for a global audience. Please make sure that it is suitable for you and visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware of the risk disclaimer here stating that trading for exchange is considered high risk and therefore may not be suitable for all traders and investors. Please seek the advice of an independent financial advisor for more information on that. This disclaimer is valid, so take a look at the details at admiralmarketsglobal.com before continuing watching this video. This is first of all the euro dollar weekly chart as we take a look at what happened with the dollar. Last week, of course, we've been saying here in this video analysis that the euro dollar has been falling, the pound dollar has been falling, the dollar yen has been rising, so dollar strength across the board, and that will continue until we see some like clear signal of at least a strong weekly candle to the opposite side. So in fact, last week seems to be the very first one with maybe two exceptions within this downtrend here that looks like indeed a turnaround. Right now, I'm open, in fact, at this moment to both sides. I will keep an eye on price action as it responds to levels on intraday levels. For the moment, though, from a weekly perspective, last week's candle was certainly bullish, closed near the high, indicating that the bulls remained in control throughout the entire week, and it's one of those candles that could lead to a retracement to the upside. It is one of those candles that I was talking about in this entire downside. I said, well, this downtrend is valid until we see some signal on the weekly chart. That signal has arrived. Now, that's not a guarantee that the euro dollar will move up, but there is a decent chance now, right? Until that point, it really made no sense to look for reversals because the downtrend was so in control, and was so powerful, I should say, and there was no reason to doubt the bearish momentum. At this moment, that dynamic has changed. So that's an important development. Now, does that mean I'm going to jump in along right now? No, but the environment has changed, and I'm going to keep an eye on that throughout the week. If I put a fib on this, what could happen is a retracement of last week's bullish candle to perhaps about halfway, maybe even deeper, maybe to retest the low, which then could be a bouncing spot for upside up to which fibs? The 23.6, the 38.2 are the most common levels I would expect price to retrace up to, with the 50 fib as the very max. Why would those be resistance spots? Because this is still a downtrend, and therefore this could be the level where the downtrend continues at any of these fibs. The 23.6, 38.2 being the most likely, and the 50 being the, let's say, the third less likely. If it goes above the 50, then I would be cautious with the bearish scenario, and then something else is maybe going on. As long as it stays below the 50, in the long term, I'm expecting bearishness. But in the intermediate short term, we could see price move up to those fibs before turning down again. That could be a slow process, by the way. That could take long and tedious with, of course, Christmas coming soon and holiday season in general, lasting from various time frames. This could, of course, last to actually mid-January, right, before the holiday season is rounded up and finished, including various holidays and New Year's Eve. So in that regard, the 38.2 fib could be reached maybe mid-January, end of January, and then we could see maybe a continuation of the dollar strength trade. That's what I'm looking for. In the meantime, though, what I'll be expecting this week is perhaps a down to retrace last week's candle, and I'm looking for potential upside up to those fib levels for the remainder of the week. Now, of course, there is FOMC statement, and that always has an effect, so beware of that. That's on Wednesday. Moving on to the pound dollar, basically what is valid for the euro dollar would be the same thing for the pound dollar, only I would then put the Fibonacci, place it on this entire swing high, swing low, and then look for price to get to any of these fibs as well, but not the 23.6 so much. Rather the 38.2 or 50, and the 23.6 would be kind of the fib that I wouldn't expect the pound dollar to stop at. Here too, retracement of last week's candle for that upside to the retracements, and then downside at these fibs at the 50 or the 38.2 or even the 61.8 seems the most likely scenario, just like on the euro dollar. Then we have the dollar yen. The dollar yen, of course, here too in a gigantic uptrend, as everyone knows, here, 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 and here. Last week was one of those bearish candles that could indeed place the uptrend in a temporary pause, and it's no different than any of the other analysis. We can put a fib on this, swing high, swing low, and look for price to stop at, for instance, 23.6 or the 38.2 or the 50 fib for uptrend continuation. It's the same story on all these dollar pairs, in fact. Then the AUD USD2, looking for downtrend continuation here, but last week was a bearish candle, contrary to the euro and pound, which had bullish candle. So a big difference here between the Aussie and the other dollar pairs. Whereas we had dollar weakness against the other three, we had actually dollar strength against the Aussie, which means that the Aussie was the big loss here, the big loser here, in fact, because it didn't gain against the dollar, whereas the other three did. So the Aussie lost ground, I should say, against the dollar here. And in that regard, there's no signal of a retracement. Now, of course, if the dollar could weaken against the others, then it could happen against the Aussie here as well. So that's something to be careful of. In general, though, it's possible to look for further downside trend continuation. Looking at this 4-hour chart, you can look at this channel, for instance, and I'll be looking at a retracement, perhaps to this top here, anywhere as long as price stays below last week's low, which is here at 83.70. Any retracement up is still a good reason to look for shorts, as price retraces part of that bearishness, right? As long as it stays, the weekly low is a bit lower, in fact, the weekly high right here. All right, so back to the 4-hour chart. All right, any retracement up, any chart pattern on the hourly chart that could look like, for instance, a zigzag completing here like this at that spot, or perhaps any bear flag like this could be a signal for downside. But as I said, need to be careful with the dollar in general. When we're looking at the other pairs, the Aussie is kind of the exception in the whole story. So although the bearishness makes sense from looking at a currency pair perspective, if we look at the overall situation, need to be careful with that, Aussie short, especially when getting closer to the FOMC. For more information on how these pairs will play out, take a look at Nenet's Toronto Last webinar weekly FX recap Monday. Also Tuesday, Wednesday morning, there's a live trading lab and a Forex strategy webinar. And on Wednesday and Thursday, we have actually Pro Learning Labs. The topics are Fib, ARCs, fans, and expansions, and of course, Flashback 2014, and what could we expect regarding trends in 2015. So looking forward to see you in these webinars, and wish you all happy hunting, good trading, and cheers.